S.D. Boyan.
This is the Doc with SilverDoctors.com. Joining us today is one of our favorite returning guests, the Golden Jackass himself, Jim Willie. Welcome back.
Oh, good to be back, John.
Well, Jim, why don't we start right off with gold and silver. Yesterday on Friday with NFP release, we had really just a classic takedown exactly at 8:30 Eastern on the release. But the interesting thing is, in times past, a big takedown on the NFP release might take the metals down for a few days, but the takedown lasted maybe 30 minutes, and then we had a big resulting spike. So what are your thoughts on the recent action in the metals, and particularly the current backwardation in gold and silver? What is the backwardation signifying? Is it signifying a tight physical market, or
You have a cheaper forward price, like 3 months forward, and it's cheaper than the spot price. It comes from shortage at the spot, shortage in the current, shortage in the present. I've heard some of the arguments, and I dismiss them rather quickly about, oh gosh, you get a big meltdown coming in the paper gold and silver price. This is not 2007. This is not 2008, which means that we dictate here a much softer washout event. What's different about now compared to 5 and 6 years ago? Well, China is now buying frantically, whose access through Hong Kong is experiencing about 100% growth annually. The Western nations have their citizens buying coins frenetically, about 80% annual growth across the board. The Shanghai Gold Exchange is the new kid on the block. It didn't exist back then. They're setting up arbitrage with Shanghai. It's just starting. It'll pull apart the London price and cause drainage to the London banks. It's a very different world with tremendous eastward gold flow. Gold is moving from London to the east, particularly China, not just China, but in particular China. You've got to look at the flow, just like you look at money flow in the stock market and bond market in the United States. Look at the gold flow. So the flow is moving. It's got huge momentum on the metal side moving east. It reminds me of some of the shallow comments we heard a few years ago about, oh, gee, we have a repeat of 1980 with the Hunt brothers. That was the epitome of stupidity. We have the exact opposite of what happened in 1980 happening today, and we have a totally different situation today compared to 2008. I'm frankly a bit tired of the shallow analysis that the gold community is subjected to, sometimes by its own members. I would welcome a gold move to 1450 and a silver move to 25. It would hasten the drainage moving from east to west and make quicker the demise of the New York and London scum that are operating their banks. You got to pay attention to the heavy volume moving from west to east. Therefore, a gold and silver price that's offered lower will just accelerate the bank system breakdown, because gold is probably about the only asset that they have in their system that's not paper and crumbling into confetti. The principal vulnerability, though, is with the COMEX itself. As the gold price declines, the COMEX is at risk of a default. I mean, they're running out of candidates like MF Global and PFG Best from which to steal, with total approval of the U.S. government, regulatory agencies, and banks, and court system, and appellate system. I'm surprised it didn't go to the Supreme Court to bless their crime. No, if the COMEX, it has almost no metal and has almost no clients compared to 5 years ago, then I don't expect we're going to see a similar event to 5 years ago. I'm again, very tired of shallow, silly, stupid analysis.
So Jim, let me ask you then, with the entire debt crisis in the Western world, will a COMEX default, is a force majeure coming? I guess, do you view gold and silver as the trigger that may cause the coming collapse, or what are your view as the most likely trigger events for really a full breakdown in the system.
I don't think we're going to see a breakdown, a default as a trigger event in gold and silver. I didn't say we're not going to see a gold and silver default. I said it will not be the trigger because there's just too many deep sources for gold that the central banks have access to. I refer to Basel, Switzerland. I refer to the Roman catacombs. And the Bank of England has I think they're pretty close to the bottom of their gold barrel in London for the Bank of England, but they have big, powerful friends in Rome and Basel, Switzerland. Now, the trigger is not even going to come from inside the United States because it's just so controlled. The financial markets are really being operated from multiple different centers, in particular the Federal Reserve and Department of Treasury, J.P. Morgan, Goldman Sachs. It's just so corrupt to the core. We're seeing a blossoming of the fascist business model and its corruption that's accepted. We have very little law enforcement. So attention should be drawn to Europe. Look at some of the most recent events that are really quite staggering. The Italian elections basically have kicked out the Goldman Sachs preppy Mario Monti. I'm surprised he's not being thrown off a palace balcony. It's directly a response to hikes that Monti imposed on property tax to finance the bankers, to rescue the bankers. So the Italian people have a much more effective political system than the United States. The United States doesn't have any effective political system. But Italy actually put in a lead spot a comedian, kind of like John Belushi, to help to form, a coalition government. But preppy Mario Monti is on the way out. What does it mean? The defense of their big dead banks with extreme liquidity lines might not be managed quite so well in the future, near future, immediate future. That'll come to an end. Then in Spain, you've got new high-level financial corruption. I mean, the highest level, like the cabinet of the president or whatever they call him. I think he's the president, not prime minister. It's paralyzed the nation at a time when they've already seen a string of big financial firm failures. They've got like 25% unemployment. It's almost a weekly incident in Spain that 1 million people show up in a city to show their objection. I think the likelihood of violence on the streets is greater in Spain than any other country. But Spain's bank insolvency and wretched unemployment, it's causing tremendous distress, and I think there's going to be a breaking point there. Then in France, you've got Hollande, the leader of the socialist clowns, who think that by imposing taxes and granting big giveaways, they can solve things. No, what they've caused with their big tax hikes, like to the highest brackets, it's now about 90%, they've caused a tremendous resulting capital flight. Money is moving out of the big French banks. Money is moving out from the big wealthy accounts. It's moving basically to Scandinavia, where it can find some safe haven. But it's leaving the nation extremely vulnerable. Then you've got the German economic slowdown, which is really capturing some attention. It's slowdown, but what it's going to do is remove the ability and patience of the Germans and their parliament and some of their leaders, maybe not necessarily their political leaders, because they're basically in the hip pocket of the EU Commission and the big bankers. But it's going to remove the German patience on rescues. Then you've got the London banks, which it's not a secret, but that they're exposed to the Southern European debt. But what is kind of a dirty secret is that the London banks are joined by the big French banks. The French are not big, wealthy nation, but the French try to act like a big, wealthy nation. And they thought, well, gee, we can finance, Spain and Italy and Greece, and we can be one of the big guys and get some elite prestige. Well, what they've done is they've set themselves up to have their heads cut off. Recall that also that the Draghi, Mario Draghi, another Goldman Sachs preppy who deserves to be booted. His solution, the LTRO, the long-term refinance operation, they're basically bonds that have a different subordinated structure. In other words, if something breaks down, those bonds are superior and they get redeemed first rather than some bank bond or whatever. Well, the LTRO by Draghi got a big insult a month ago or so when it got a debt downgrade. So imagine the Central Bank of Europe institutes a vehicle that gets a debt downgrade. This is unprecedented. Then you've got the U.S. Fed, which is basically the only buyer of the U.S. Treasury bonds. Maybe Japan is an exception. The European Central Bank is the only buyer of Southern European government bonds. Here's a note talking about distress to the system. In January alone, the U.S. dollar swap facility set up by the Federal Reserve in New York enabled a movement of $1.2 trillion to Europe to help keep their banks up. So I would say that Europe is the pressure point. European banks are collectively, by the way, a good bit larger than the U.S. banks collectively. But the European banks are in suspended animation while the U.S. banks are being supported by narcotics, money laundering, and whatever else. I think a big European bust is coming. Events are coming for a big European bust. It's going to cause a mad scramble to safety. And they're not going to be looking for Switzerland and the hills any longer because of their euro peg. A big rise in European gold price, I think, is coming, and it'll be shocking and not reversible. It'll ignite a global gold rush. A massive shortcoming will follow, and I think a powerful 30 to 50% rise in the gold price will come in response to the European collapse. And then following that, which has been waiting in the wings, is the gold trade finance platforms. Gold settlement for trade across the world, primarily coming, though, out of the East. In other words, trade between two parties not involving the United States, one of them being an Eastern nation. They will settle not in dollars anymore. They will settle in gold, and they'll have some help from their friends in Turkey. We're going to see an end to the dollar reserve status following these different events, and the funeral will have a speech given by the Saudis to bring an end to the petrodollar itself. So I think you got to look to Europe, not the United States. The United States is a kind of a joke as far as crises and management and propaganda and lifts up with phony money, secret slush funds, exchange stabilization fund by the Treasury, all kinds of narcotics, money laundering, sponsored fraud. It's just unbelievable what's going on in the United States. It's not going to be the trigger. It'll be Europe.
So Europe will be the Eurozone will be the trigger of the collapse, and really it appears like it's already beginning then.
It's really blossoming. What's unique about the last several months is that a lot of different things are happening. And it's exposing the fact, John, that we've got 15 to 20 different potential sites to force the breakdown. It's not just one or two. Every couple months, there are a few more potential areas to cause the breakdown. That's very, very dangerous and new. We didn't see that 5 years ago. We didn't see that 3 years ago. Back in 2007, remember, it was really just the subprime mortgage bonds. Everybody focused attention on that. We've got about 12 different areas now that are just as dangerous as the subprimes, and most of them extend to Europe. If they're not in Europe, then there are problems elsewhere that extend to Europe.
We'd see even right now that the Fed is trying to blow another bubble in housing. Just in the last week, there was an announcement that the Ninja loans are back. Interest rates are still remaining around 2%. Do you think the Fed will be successful in blowing another bubble and kicking the can down the road a little bit longer, another 2-3 years for another short cycle before the ultimate collapse, or is it just going to be too big of a snowball for them to stop at this point?
Well, it's too big. There are too many. I mean, they've only got 10 fingers, but they've got 15 to 20 different areas that they need to plug. I don't think they're going to start plugging with their toes. I don't think they're that dexterous. This real estate bubble is a joke. There's no new bubble coming. There's no new bubble in existence. There's no new bubble even on the horizon. What we've got is the U.S. government with the Federal Housing Administration, which oversees Fannie Mae and Freddie Mac. What they've done in the last 2 years is they've sponsored a whole new round of subprime mortgages. Except instead of banks like the big New York and California banks underwriting them, it's the federal government. We have not seen a rebound in demand for housing, even though the 30-year mortgage rate is under 4% and has been for quite a few months. What's not shown in the press is that there's still 10 million homes that have been foreclosed sitting on the bank balance sheets in their portfolios. And when they institute sales, they're called short sales because they're selling them. They're selling the houses they've got. They're called REOs, real estate owned. It's a silly acronym, but it means bank-owned property. They're selling their bank-owned property for less than their commitment. They're losing money on it. They're called short sales. And they are not included in the Case-Shiller Home Price Index. It's a parallel of the discouraged workers no longer included in unemployment. So they're bringing labor market calculations to the housing market, one iota. They're not going to revive the housing bubble for a simple reason, that there's not widespread enough finance. It's exclusively coming out of the Fannie Mae and the FHA in the U.S. government. The other reason it's not going to happen is people have a great distrust for buying homes after they saw so many people foreclosed. Another reason is the people don't have brisk income. So the factors are not there. It's kind of a lunatic claim to state that the housing market is going to be re-bubbleized. Not even close. It's stuck in a depression, and they're now trying to make the argument that it's got a recovery. I don't give one flying backward dried turd whether the new home construction is revived. That aggravates the housing depression.
So if the Fed is not likely to be able to reinflate a new big bubble, what's your take? Are we going to see a lost 2 decades like the Japanese, or what's your take on the likelihood of an ultimate collapse in the near future?
I think the U.S., I said this back when Lehman Brothers fell in the autumn months, the last few months of 2008. The U.S. is going to be on a path that it cannot escape for systemic failure, for total dependence upon the printing press to cover its debt, and for a debt default of the U.S. government debt, which will come in the form of a global conference to organize and coordinate the debt write-down. And there will be U.S. military outside the room to make sure that everybody complies. Now, let me give a more detailed answer, because I do believe we're heading to a debt default. And the events that you see in the Congress and the clownish White House leadership really accentuates the lack of leadership, the lack of direction, the lack of decision making, and the broken apparatus. They cannot bring about significant debt reduction and deficit reduction. Notice that if they go ahead with these sequestered cuts, they're talking about $4 trillion in cuts over 10 years. I cannot emphasize how small that is. But let's take a look at why I believe the collapse likelihood is at our doorstep. It's happening now. It's no longer ultra slow motion like 2 years ago. It's a new event every few days, every couple of weeks, a new big important event. The pace is quickening. It used to be that MF Global type events would happen, and you wait a few more months and another big MF Global type of event would happen. Now it's much more rapid. Here's some of just in the last couple of months, 2.5 months, just recently, here's a list of some of the extreme events. Okay, like we have the U.S. Fed announcing almost every month. It's like an assurance of their extension of 0% almost forever. It's really to denigrate and discredit their own exit strategy talk. And that's to make sure that the big banks in the United States don't exit their own carry trade and force a problem with a sale of their long-term treasury bonds. We have a $1.2 trillion, as I mentioned, credit line doled out by the Fed as part of their dollar swap facility to the big European banks. That's January alone at life support. We have the Germans demanding repatriation of their official gold account. That's going to expose the allocated gold scandal. We have the Italians electing a comedian like John Belushi to halt property tax hikes that bail out their banks. This is an insult to their entire political system, which experienced that Mario Monti appointment without an election. We have the London banks recently sponsoring a Chinese yuan swap facility, kowtowing to Asia. This is unprecedented. New York will not do such a thing, but London did, which means London and New York might be at odds. We have an attack announced on Mali in North Africa to wrest gold and also uranium, but very much timed at the when the Germans asked for repayment of their gold, and the quantities really fit. I mean, there was a suspicious comment by the French and British saying it'll be repaid in 7 years. 7 years is approximately what Mali produces in gold. That will cover almost exactly the German repayment. That was organized by France and the United States. Like we have a shutdown of the Mongolian gigantic copper and gold mine announced by Rio Tinto, which is an example of resource nationalism. We have raids larger and bolder of the GLD inventory. That prevents the COMEX default and will produce I think, a bigger price discount versus the spot for GLD shares. I think it's going to go down toward 20% discount, and that'll cause a lot of problems. We have the U.S. Fed announcing its QE5 shortly after QE4, which happened shortly after QE3. The QE3, by the way, is to cover the fraudulent mortgage bonds and try to free up some of the logjam. I call it QE 187 or QE to infinity. We have events like the major central banks are losing credibility while engaging in an open currency war. So the franchise system of central banks is being questioned. They're at battle with each other. We have the U.S. facing a fiscal cliff, which forces a quantum leap in job cuts. They're talking about job growth and the stubborn economic recovery. They're going to have, 80,000 military contractor jobs cut. That's just the military. I like that, though, because we got to bring down our war machine. We have the Japanese ratcheting up their currency competitive devaluations. They're probably the only buyers of U.S. government debt among all the different governments. But the Japanese are forcing losses by the Swiss, who are trying to manage their euro-franc currency peg. But the losses come because the Swiss are trying to take some of the euros and diversify it to Japanese and British bonds, but they're getting hurt with that too. We have the Russians hosting a G20 meeting to coordinate alternatives to the US dollar-based trade. They're not going to continue with dollar-based trade settlements. Not going to happen. We have the emergence of Turkey and soon India as gold trade finance intermediaries. They're going to supply one of two parties engaged in trade. They're going to supply them with gold so they can make the settlement of the trade. We're going to have gold trade settlement. We have the Iran sanctions coming to a conclusion with a fig leaf. Not a fig leaf, an olive branch. I'm sorry. Fig leaf covers your private parts. An olive branch is extended to your enemy. The U.S. with the olive branch is trying to approach the Iranians and say, let's bring about a conclusion to this. It's a surrender. All these events have occurred just since the new year began less than 2 months ago. The pace of extreme events is quickening. These extreme events have become the norm. It's like, an MF Global every few days. It puts tremendous additional stress on the system, which the boys are trying to manage. They don't have enough people. They don't have enough resources. They don't have enough channels. They don't have enough brains. to do it. The managed system cannot succeed. It's too complex. They're actually trying to work toward an evolution of total finance management, and it's just not going to work. A series of climax events is soon coming. The changes, I think, are going to be breathtaking and rapid. The vast wealth has already, for years, 3 or 4 years, been moving east, and with it will be great power. Look for some seemingly minor bank failure. I don't have a name in mind, just a minor bank, a mid-sized bank. It goes bust and causes a ripple effect of deeper damage. It's going to be involved with larger banks tied to commitments like with counterparty contracts, or an intermediary supply function, and things are just going to start wrecking. I think vast wealth is going to be lost in the U.S. and the West, except by gold and silver owners, which is going to be harder to do because the rules are becoming stricter. Those who have set themselves up in the last few years are going to be the big winners, and the ones who are bold enough and brave enough to do it now are going to be glad for their actions. I got a family member who refused my advice 3 years ago, and now that family member is facing a conversion of her very large IRA, private managed pension fund, a conversion into these new special treasury bonds. That's going to cause a real firestorm by the public, and they're going to wish that they've converted their IRAs into a gold account.
And we may be seeing the last real opportunity to enter the gold and silver markets in the physical form by the public right here.
Well, I agree totally. And what's going to limit it, John, is that there's not going to be anything available.
Exactly. I mean, we're seeing at SD Bullion, we're seeing just in the last month, physical supplies are evaporating of almost every product. So the largest wholesalers in the U.S. they're out of Eagles, they're out of Maples, they're out of 90%. I mean, we're talking 6-week delays on 90% silver. We're talking 3-week delays on Eagles and Maples. And these are the largest suppliers in the entire U.S. They're out of everything.
Well, and the U.S. Mint, let's not forget them. They have 2 significant events recently. One, they've announced these brief moratoriums where you're not going to be able to buy, or they'll be rationed out. All right, they're admitting there's a shortage. But they're also coming out at the U.S. Mint with higher premiums on the silver Eagles. So they're admitting that the silver price is phony. No, listen to the Mint. Listen to the Mint. Shortage, higher prices.
Exactly. Well, Jim, before we let you go, why don't you tell our listeners where they can find your information and your newsletter? Your public articles are obviously posted on Silver Doctors, usually on Wednesdays or Thursdays. But for those who want more, where can they find your services?
Okay, I have a public website. It's called www.goldenjackass.com. I know it's an irreverent, strange name, but that's what my mother used to call me because I caused a lot of problems when I was young. I spoke back, I talked back, I caused problems. But the Golden Jackass website contains a public free page. It lists all the interviews recently, it lists all the public articles recently, and it has these indexes of archives. But all this is really to promote. It's a shameless promotional effort on my part. I'm trying to sell the Hat Trick Letter. That's a paid subscription service. The Hat Trick Letter itself consists of 2 reports. The Money War report is about high-level topics. It pertains to things like the global revolution, the rebellion against the dollar. It pertains to seeking of alternatives against the dollar. The golden currency report is much more low level. It talks about coin demand. It talks about movement of investment demand, like into China through Hong Kong. It discusses a lot of currency competitive devaluations, the currency wars between central banks. So with the high level money war report and the lower level golden currency report, I try to cover both sides thoroughly. Maybe a little too thoroughly, but it's like a magazine. No one reads the New York Times from cover to cover on the Sunday issues. So you pick your sections, you pull out your sections you like, and you read them thoroughly. So I hope people can go to the Golden Jackass website, take a look around, learn a little bit with the free material. But then when curiosity and depth is required, take a look at the subscription reports with the hat trick letter.
Both are highly recommended by us, the Silver Doctors. So, Jim Willie, the Golden Jackass himself, the collapse is on the doorstep. If you haven't taken your financial safety with gold and silver yet, you might be looking at one of the last opportunities to do so. So, thanks for coming back, Jim. It's always great to have you.
My pleasure, John. Thanks.